All right, well, let's get going with the show and get our guests on board. Akshay Bhagwat, Associate Director, Derivatives Research, JM Financial Services, now joining us on the technicals. And we're also joined by Rajesh Agarwal, Head of Research at AUM Capital. Hi, good morning to both of you, Rajesh and Akshay. Thank you so much for joining us. And let's get going and start with the first question that's coming in on WhatsApp. Krish is writing in from Trichy. He says, okay, the question is on Bosch, an earnings candidate. He says that he has Bosch and the buying price is 20,260 rupees. Should he hold or exit now? Well, Bosch is, of course, doing well in today's trading session. It's up in a way almost 4% after posting its results. But for the next 1 year, what would you recommend, Rajesh? Do you recommend a hold or should he book partial profits there?
Good morning, Ankita. Good morning, Wood. Good morning. As far as Bosch is concerned, the numbers were pretty good, no doubt on that. And with the kind of balance sheet it has, I think for a long-term horizon, maybe by long-term, I mean 1 year or more, one can continue holding. And by any chance, if it corrects from the current levels by around 10% or so, that would be for market condition, of course, company is doing very well. So one can even accumulate. So it's a hold from a side at this point of time.
All right, so the next question coming in at this point in time is about Lloyd's Engineering. The quantity is 210. And the viewer who is writing in from Mumbai, Nikhil Sharma, wants to know that he's holding a quantity of 210. Entry price is 96. Now, I think he has two stocks. One is JBM Auto, quantity 56, entry price 708, and the other is Lloyd's Engineering. Broad question on both of them, saying, should I exit these stocks? Should I hold on to them? And what of future gains? So let's go across to both of you gentlemen. Akshay, first to you, and then we'll go across to Rajesh as well.
Firstly, good morning to all. So the question on Lloyd's Engineering, the technical strength of the stock is pretty strong, and the advice is to continue to hold. From a positional perspective, that's minimum 2 to 3 months of holding. Your support zone is 80, and the expected target going by the current technical parameters work till around 120 to 125 area. That's where you can consider booking your profit.
And the other one, JBM Auto, what's your cue on that one?
Yeah. So for the other stock, which is JBM Auto, this is more of a neutral setup. I believe from the short to medium term on technical parameters, it's more of a range bound structure, which I see where the resistance lies at 750 and the support is at 550. So there is no fresh trade recommendation. I think the stock will languish in this range for the next 2 to 3 months. So continue to hold is what the recommendation is.
Rajesh, coming quickly to you, what's your sense on both of them, Lloyd's as well as JBM?
See, both are a hold at this point of time, although JBM is doing very well on the EV bus segment at least. But the valuations at this point of time seems a little bit stretched. So immediate upside seems a distinct possibility. So you have to wait for maybe 1 year down the line to get target of around 10-12% from the current market price. As far as the Lloyd's is concerned, the numbers have been great in the last 2-3 quarters. I think one can continue to hold.
All right, so that's the view coming in on JBM Auto, but let's move on to the next question. Sriram Raghuraman is writing in from Chennai. He says he has Piramal Pharma. The entry price is 37 rupees. A fundamental view on the stock is what he wants from the long-term perspective. Coming to you, Rajesh. Piramal Pharma, what would you recommend for the next 1 year? At least he's a long-term investor, so 1 year to 2 year view. Do you recommend a hold on Piramal?
See, the company is doing great, but the valuation at this point of time, I think it's on the higher side. Sitting on a good amount of profit, at least book partial profit. Move to a better pharma names like a Cipla or a Dr. Reddy, that would be a better choice.
Okay, and the next stock that we are focusing on is Aditya Birla Fashion and Retail. This query coming in from Shankara Sundar wants to know that he's holding 2,500 shares of it. He entered it at 74. Says, could you share your view on the company's future? Do you see a possibility of a strong turnaround over the next 5 years, similar to Trent? And also, is this a good stock to hold for the long term? So, Rajesh, I think this one is for you. Wants to know, is this something that he should hold on? Actually, at this point, you know, he does seem to be sitting on some bit of loss.
Unfortunately, he has to book losses because I don't find any reason to believe that in the near future or maybe in the next 1 or 2 years, something dramatic would happen. The numbers have been pretty bad. Margins are very low. Uh, Company not doing that great. Comparing this with trend would be a long shot. So it's better to exit. Any uptick should be taken as an opportunity to exit.
And anything you recommend in this pack?
Sorry?
Anything you would like to recommend if he exits this stock in this pack?
With the kind of correction trend had witnessed, although this quarter numbers were pretty decent, I would say, then store addition was just one store in West Side and a number of stores in Zudio. But after the current correction, I think the valuations are giving some amount of comfort for a long-term investor. Short-term, there might be some issues, volatility because of volatility. But with the kind of growth which we are witnessing into retail, be it Westside, be it Zudio, be it Star Bazaar, they're doing great. They're doing into some diamonds also, and they enter into beauty segments also. So these segments are going to do well, but that would take some amount of time. For long-term horizon, I think trend would be a bit upper.
All right, so that's the view on Aditya Birla Fashion, but it's time for a quick breather. Don't go anywhere. After the break, we'll come back and keep getting your questions answered on the other side of the break. Stay tuned.
Back, you're watching Buy Now, Sell Now on ET Now, and we are continuing to take up your stock specific queries. Akshay and Rajesh are both with us. So let's quickly take on a question that we are getting in from Punjab. Parth Anand is asking us about HE Infra. He's holding about 100 shares of this. The entry price is 716. He's asking our experts to guide him. Now he's, the price at this point in time, of course, 549. Akshay, would you like to take this one, please?
So if you look at the technical setup of HG Infra, I think overall still it is positional view is more positive if you hold it for 3 months plus. Although on intraday or short term, the parameters or the momentum is a bit down, but the advice is you can continue to hold if your time horizon is over 3 months, probably around 3 to 6 months. 5450 is where it trades. Your support zone is roughly around 510, and with a 6-month perspective, you can look forward for potential targets till 600 to 620.
All right, so that's the view on HG Infra on the charts. But let's talk about the next stock. Tushar Shah is writing in from Ahmedabad. He says he has LMW. The entry price is 7,800. He's been holding it since 2018. He wants to know if he can wait for 2 more years and what is the target for that time frame. So it's difficult to give a target for the next 2 years. But LMW, Rajesh, I'll come to you. He's sitting at a considerable profit there. What should he do? Should he book partial profits given the kind of profit he's sitting at? And for the next 2 years, what would you recommend?
See, unless there is no need of money, I think one should continue to hold. Strong company was doing very well into textile machinery. Now they are expanding their product profile. Strong balance sheet. The only issue is the liquidity, but for an investor, I don't think liquidity is that much of a concern. It's a very strong company. Rather, any new investors can also buy on dips this stock for a time horizon of 18 to 24 months. Continue to hold.
Okay, the next question that is coming in is from Shashi. He's holding Voda Idea, quantity of 500, entry price was about 9 rupees. Now wants to know should he be holding or selling. Now Vodafone, of course, has had a sort of a mixed Q1. Really, loss has narrowed down. But Akshay, what would you suggest to Shashi?
So I think the viewer has got a very good price. That's why I think 9.5 is where he brought, and 13.5 is where it trades. So it's prudent that you need to revise your stop losses so that any gains in case the stock reverses are locked. So right now 11 is your trailing stop loss based on the technical price parameters. The view continues to be a hold. With a time horizon of 3 to 6 months, you can look forward for potential targets till 18, where I would suggest taking your profits off the table.
All right, let's move on to a live phoner now who's joining us. Anand Rege is joining us from Goa. Hi, good morning, Anand. And thank you so much for joining us. Tell us what's your question.
Yeah, good morning. I am holding Sundaram Fasteners and want to accumulate more. My current price, average price is around 1020, and I want to add more and keep it as a portfolio stock. So is it a good choice? And can I start accumulating at current price, or should I wait for correction? I just wanted your advice.
And what's your holding period? You can hold it for the long term?
Yeah, it's 3 to 5 years.
All right. Okay. Let me quickly ask both of them. Firstly, Rajesh, I'll come to you on the fundamentals. It has also posted its numbers. That stock is also doing very well today. Sundaram Fasteners, that's given an earnings beat, at least for this quarter. Would you recommend a hold for the long term, as he mentioned? And of course, on the buy on dips, so whether it is a good entry level, because it's already moved quite a bit. We'll come to you for that. But Akshay, first, Rajesh, on the fundamentals, how does the stock look?
Very strong company, not only this quarter, but they have been posting good numbers from the last so many quarters. And even the order books and other things look very strong, strong balance sheet, strong pedigree. It's a old stock from our side from a long-term horizon, and dip should be taken as an opportunity to accumulate.
Absolutely. So hold call as far as Rajesh is concerned. But Akshay, coming to you, he also wants to accumulate, and Rajesh also mentioned that he should accumulate the stock. But the stock has already moved quite a bit. At least it has outperformed the indices. What should be the strategy? Should he wait for dips, or can he enter at this point?
So I think dip is the ideal approach because it's already up around 8%. So I think you need to kind of distribute your buyings between the zone of 1150 to 1200. So between this 50 rupee odd gap, you need to distribute the rest of the remainder of the holdings which you plan to buy in the stock. I think in all likelihood you should get these small dips in the coming days and continue to hold for positional targets of around 1350 from a 6-month plus perspective.
Okay, let's take a question that we're getting in from Muscat right now. Rohit is writing to us, and the stock in focus is Nazara Tech. He's holding about 500 shares of it. The entry price is 350. He wants guidance on this. The share trading currently at 354. Akshay, quickly on that, because I don't think he's mentioned a time horizon. So how are the technicals looking?
See, technically, it's nearing one of the important resistance zones of 360. If you recollect, exactly last year, August 2025, 360 was the area from where we did see a significant correction unfold in the stock all the way till 220. So in all likelihood, there is good chance that there might be some temporary resistance of profit booking around 360. So it completely depends. If you're a short-term trader, your time horizon is just for a week or 10 days, then the advice is to take profits once around 360 and wait for dips around 330, 340 to reaccumulate. In case you are more of a long-term investor with 6-month plus of horizon, then these short bouts of correction should not worry you. Continue to be invested. The broader targets or the view is still positive 1 year plus, and possibly 425, 430 is where we are looking at the stock from 1 year plus of investment horizon.
All right, let's move on then to the next question that's coming in from Nitya, who's writing in from Mumbai. She says that she wants to know if she can buy Raymond and Raymond Lifestyle for the next 1 to 2 year timeline. If yes, then what should be the buying price and that she should be looking at? Coming to you, Rajesh, first on Raymond and Raymond Lifestyle for the next 1 year, would you recommend buying that? And then we'll come for the levels.
Both are good stocks to hold for a long term. Doing very well, strong brand, and after the demerger and all, even the focus business are there. So yes, one can buy for long term.
Okay, so Rajesh has given it a thumbs up, but coming to you, Akshay, what are the entry levels for Raymond and Raymond Lifestyle?
So there's a mixed view here. Raymond is positive. Raymond Limited, which trades at 628, with a positional perspective of 2 to 3 months of holding, you can look forward for targets of 740. The support is roughly around 560 as it currently reads. But Raymond Lifestyle, the other stock which we looked at, 725 is where it trades. Technically, it's in a downtrend. The volumes are pretty dull, not encouraging about any big action happening in the stock. So for me, it's an avoid going by the technical parameters.
All right, another question that we're taking up right now is coming in from Ghaziabad. Ashutosh is writing in. He's holding stock from the banking pack, ICICI Bank, 50 shares. The entry price is 527 rupees. Wants to know if he can hold the share, currently trading nearly 1.5 times of that. So first coming to you, Rajesh, what's your sense on it? He doesn't really mention a timeline. But what do you feel about it?
Strong bank, superb numbers they have given, better than their peers. And I think for long-term horizon, it's a buy from our side. Maybe some sort of correction around 1400, 1380 would be a better levels, but for a long-term investor, I think 10, 20 rupees here and there doesn't really matter. So it's a buy from our side.
Okay. All right. Let's get a live caller on board then. Mr. Reddy is calling us from Hyderabad. Hi, good morning, Mr. Reddy. Thank you so much for calling us.
Good morning, ma'am. I am having 1,400 shares of NHPC at the rate of 84. Can I hold or average or exit, ma'am?
Okay, and for how long can you hold this? Are you a long-term investor?
I can hold on 1 year, no problem.
Okay.
1 or 2 years. 1 or 2 years, no problem.
Okay. Rajesh, coming to you, would you recommend a hold on NHPC for the next 1 year or so? Because NHPC has really been, in a range. It has been consolidating for a while now. So what should be your view? Should he, sell out or should he hold on to it and expect some move to come in?
See, the stock is company is basically into hydropower, and where there were concerns because of El Nino, the water levels going down, hydropower production would be down. But since the monsoon has taken up, I think going forward in the next 2-3 quarters, things would improve. Otherwise, also, if you keep this stock for a long term, the dividend yield is good. So anybody looking for a stable dividend yield kind of return with less of amount of volatility is with a lesser risk, I think one can continue to.
All right. Well, with that, we slip into a very short break. We'd like to thank Akshay for joining us, but we'll be back to answer more of your questions. So do stay with us on Buy Now, Sell Now.
Welcome back. You tuned into Buy Now, Sell Now, a show where we get all your stock-specific questions answered. The number is still flashing on top of your screen, so you can still write into us. And now we're joined by Lakshmikant Shukla, technical analyst, institutional research, Yes Securities India, who's now joining us. Hi, good morning, Lakshmikant, and thank you so much for joining us today. Let's get going and resume with all the questions. Shekhar is writing in from Noida. He says that he has Cochin Shipyard, the entry price for which is 555. He wants to know if he can add more at current levels. Coming to you, Lakshmikant, Cochin Shipyard, at the current levels, is it a good entry level or should he wait for a bit of a dip or correction to come through? Lakshmikant, can you please unmute yourself?
Am I audible?
Yes, you are.
Okay. Good afternoon to all of you. Cochin Shipyard has given a bounce back move after taking support from its short-term moving averages. I think from here on, one can add on further in this stock and wait for the breakout of its 200 SMA that is placed around the levels of 1,540. I think that would be the upcoming hurdle for this Cochin Shipyard. But in my sense, if it keeps the breakout of the levels of 1,540, then after we will see sharp upside move in this stock toward the levels of 1,670 to 1,700 June. So on a short-term basis, one can add at current level with the stop loss of 1,416 on the downside and can wait for the upside breakout. Once that breakout trigger, we will see upside momentum in Cochin Shipyard toward the levels of 1,680 to 1,700 kind of range.
All right, now moving on to another question that we are getting in from Shimla. Kuldeep is writing in, the stock in focus is Inox Wind, got a quantity of 995 shares. The entry price is 124. Now he wants to know, should he continue to hold on this one? Not really specifying a time period, but let's go to Rajesh on this one. Rajesh, what's your view on Inox? Now it's of course cracked about 6% yesterday, but a bit up now.
I think any uptick should be taken as an opportunity to exit. Wait for some more time, maybe 80, 82 odd levels, some max, which I believe will be going in the near future. So try to exit. The numbers are not that great. The business is highly competitive. And going forward too, I don't think any major upsides is there. So it's better to switch from this to some good companies for a good recovery.
You'd recommend in this segment?
Sorry?
I said anything you would recommend in this segment if you were to exit?
In this segment, I think one can have a look at Vari Energies at this point of time.
All right, let's move on then. This is Ritesh who's writing in from Indore. He says he has Infosys, 100 shares. The entry price is 1,399. He wants some guidance on that. He's not given the holding period. But Rajesh, let me come to you. Infosys, would you recommend a hold given the fact that the IT stocks have seen quite a bit of drubbing? Though the guidance, the guidance is not that strong, but on the valuation front, there is a bit of a comfort after the kind of drawdown that IT has seen. Though we do see some bit of a revival coming in IT in the last 1 month, the IT index has been, seeing some gains. So, but for the next 1 year, would you recommend a hold on Infosys?
You said it right. IT index has seen a cut of almost 20-25% from the recent tops. The entire IT pack or the larger cap names like the Infosys or TCS, these are giving very comfort on valuation parameters, and even the dividend they dole out is in the range of 4 to 5% of yield which you are getting. Talking of balance sheet, every company of the top rank companies are having very strong balance sheet, strong management. The drubbing which we are talking about was just because of AI-led concerns which were there. But since we are witnessing correction in Taiwan market and all, where AI stocks are seeing a drubbing and the money is expected to come back to India. Plus, all these three companies, be it Infosys, HCL Tech, or TCS, has given out commentaries in the last 1 month or so that they are moving into doing good capex into AI too. So I think for a long-term horizon, these kind of negative environments are good opportunities to accumulate. So Infosys, somebody holding can continue to hold, even add.
Okay, let's focus on another question that we are getting in from Hyderabad now. This is Rajesh writing in. It's a pretty broad sort of a question saying, please suggest any good auto stock for long term which has higher growth potential, and what is the right price to purchase these? And he does want our views on Sona BLW and Hero MotoCorp. So let me go across to Lakshmikant. Lakshmikant, any particular views on those two stocks that he's talking about? That's Sona BLW and Hero MotoCorp.
See, both these stock has been trending higher since last few sessions. If I specifically talk about Sona BLW, so I think it already trading in the positive territory, and a few days back we have seen consolidation breakout of the levels of 740, and then after we have seen sharp upside move toward the levels of 835 to 836 kind of range. So I think till it hold this breakout level of 740, we will remain positive and probably we see higher momentum in this stock, which could push it higher toward the levels of 880 to 900 kind of range. So my view is positive till it hold this level of 740 on the short term basis. And talking about Hero MotoCorp, so it has also surpassed its 200 DMA in previous swings high of 5800. And from last 2 days, it has been also trending. It has been already trending higher with the formation of higher tops and higher bottom. So from here on, with the support of 5800, we will see further upside move, and it could inch up higher toward the levels of 6150 to 6200 kind of range. So overall expectation is on the positive side in both the stocks.
Bringing you in here, he's also asking for stock recommendations in the auto sector. Anything else that you recommend?
I think
Rajesh?
Okay. See, in the auto space, Sona, of course, it's a very good company, strong order book, and the best part is almost 70% of the order book is from the EV segment. Some unfortunate events took place in the past, and due to which the stock didn't perform. But now I think it's the high time, although it is running to 52-week high in these days, but still there are upside left. In auto space, apart from Sona, what I would suggest is go for Mahindra and Mahindra or a Force Motor that are doing very well. The numbers have been pretty good. In auto ancillary, one can have a look at FIM Industries that again has given very good quarterly numbers in the last few quarters. So see, these are some of the names which we have been tracking.
All right, let's move on to the last question for the day. Arpan Khare is writing in from Kolkata. He says he has Garden Reach and the quantity is 200. The entry price is 2,633. He wants to know what is the upside potential in the short to medium term. Lakshmikant, on the charts, he's sitting at a loss right now. Is there any chance of a reversal in the next 6 months? What should be his strategy since he's not holding it for the longer term?
If he is having the time period of 6 months, then definitely we will see positive momentum in this stock. Since last few sessions, it has been it's been hovering below its 50-day SMA, that is placed around the zone of 2640 to 2650. I think that would be the breakout level. I think once it crosses this level of 2650, we will see sharp upside move. And during that time, it could move higher toward the levels of 2800. So with this stop loss of 2470 on the downside, one can wait for this breakout, and once it give the decisive breakout of this level of 2650, we will see positive momentum in GRSE.
All right, both of you gentlemen, thank you very much for joining us. And we slip into a very short break here on the show. When we come back, we will be bringing you more management commentary on the first quarter results.